what it costs. Yeah, I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, yeah, run it. Ooh, I really feel it's my time, think it's my year. Yeah.
Morning, everybody. Happy Thursday. It's already Thursday. The week is flying by. Welcome to the morning show. Welcome to Stock Market TV. I am Spencer Israel. I've got Steve Strazza and JC Parets and chart wizard / master / guru Alfonso in the background. We put up charts for us in real time. Hope everyone's day is off to a good start. We got a lot going on today. The question I'm wondering, after yesterday, is it time to get bullish? Maybe, right? I mean, this seems like, I don't know. I don't know. Maybe we've been so bearish for the last little while. I'm wondering if maybe that's just recency bias from yesterday. I don't know. We'll talk about that. Guest today, David Cox, is a portfolio manager at Raymond James. He'll be on at 8:50. He's got a few charts for us as well. So yeah, we'll have Kimmy as well. You know what to do. Smash the like, hit the thumbs up. Good morning, Mary. Good morning, Joe. Good morning, Curtis. Ken. Is it Frey or Free? I never know. Good morning, Ryan. Good morning, everyone watching on Twitter. Good morning, everyone watching on StockMarketMedia.com. Let's go. It's getting late.
Good morning, gentlemen. Mr. Spencer Israel, all pulled up, huh? That's it. Time we get the face ripper into year end.
I don't know, man. I mean, I keep seeing things about breadth and how it's signaling a near term bottom, and yeah,
you didn't hear that on this show.
I'm just asking questions.
It sounds to me like you've been studying your seasonality charts, maybe.
I'm just asking questions here. I'm not saying. I'm just asking.
Could it be that the price charts are dictating this at all? Could that be? I've nibbled on some things. Sold some puts in XLK yesterday. Bought some AMD.
Did you short the more aggressive ones, the 160s?
Yeah, the 160s. I think I got 310.
Yeah. That's a good price. I mean, we're getting a fraction of that for the 150s. Before we get into state of the markets, Mr. Israel, anything out there that we need to know about?
On the macro front, not really. We are watching the jobs number tomorrow. By the way, we'll have Neto on the show tomorrow to break down the jobs number for us. But on the macro front, no. Everyone is watching, bonds, obviously, which I had an idea this morning. I think we need to close the bond market. Just let everyone breathe for a day.
Yeah.
You understand if the bond market closes, the whole world falls apart, right?
No. Just a 1 day temporary closure. Let's say Monday. How does that sound?
Well, they are closing the bond market on Monday.
Perfect. Excellent.
Yep. Stock market's open, bond market's closed.
Great. All right. We're on the same page.
Why?
Columbus Day.
Columbus Day.
So I guess Columbus wanted bonds and
wait,
banks
wait,
to be closed,
wait,
stocks
wait,
open.
wait.
Columbus isn't good enough for the stock market anymore?
It's Indigenous Peoples Day now. Come on now.
No, it's not.
I tried. I mean, we got some individual stock news, some individual headlines if you'd like to go over that. But nothing, like I said, not much on the macro front. We have some earnings this morning, some smaller ones, and then by the way, speaking of earnings, next Friday, the banks report. That'll be fun. But we had earnings from Constellation Brands, Conagra, and Levi Strauss this morning. We can go over that, or maybe a little bit later. RIVN out with some news last night. They're doing a convertible note offering, so they're down about 9%.
As bad as all these headlines sound for RIVN, people buy this stock.
Yeah, they do.
Yeah, because if they don't buy this one, they're going to have to buy the ones with the communists from Michigan with the all the labor unions.
No. There was like a half dozen, maybe more, EV stocks that
The
came
market is
public.
punishing businesses for making bad decisions and putting their employees ahead of their shareholders.
Hold on, though. There's like a
Company's job is to maximize shareholder value, not just donate money to employees.
Hold on. There's like a
4-day work weeks. Get the fuck out of here.
There are other EV stocks out there besides Tesla and Rivian, and most of them are not doing nearly as well as Rivian is. Frankly,
American.
Yeah, that's my point. Yeah, like
yes.
Look, I just pulled up like Lucid, right?
Yeah, so you can look at Lucid, you can look at Fisker. Lordstown is like basically off the board. They're bankrupt at this point.
What's that ticker for Lordstown?
It was Ride. I don't even know if they're still around. You have Hyliion, HYLN. They're more on the commercial trucks, 18-wheelers, but still EVs. Yeah, I mean Rivian's market cap it's holding up there. What is it? It's 20 billion, or I mean maybe not now, but it was yesterday.
Yeah, because they're not donating money to employees. Like they're literally like they're like a real business, or at least trying, right?
No, well, JC, they don't have any money. They lose money on every vehicle they sell, so they can't give money to their employees just yet.
You don't think that they're getting grouped in with Tesla, and it's kind of like a sympathy bid?
Yeah, sure,
like
but
a sympathy relative bid
at moments for sure, right? Nothing's going to move like Tesla because they're the actual real player in this space. The big problem comes down to the simple fact that there's like Spencer alluded to, 15, maybe 20 of these companies, if you include, Chinese markets, another 5 out there, right? None of them are actually selling cars. I don't see any of these cars on the road except for Teslas. So
and Rivian's getting there. They're getting there slowly. I mean,
I've seen more and more of them, and I point them out to my wife, and she's like, "They're so ugly."
I've seen 2 Rivians, probably.
Yeah, I think I've seen one. But
I saw a VenFast truck behind the glass down in Huntington Beach.
Really?
Yeah, they had them there, 2 blocks away from us.
All right, what do we say we do a little state of the market, sir, Mr. Israel?
Yeah, we can do that.
I want to start with Japan. All right, you guys ready? How about this reversal for you bulls out there that think that we are now in the early stages of the ripper into the end of the year? Nikkei. I wanted to start there, Strazza. I got more questions than answers as usual.
Yeah.
Big reversal day yesterday across markets for sure, and then some follow through in Japan today. How do you feel about that?
Yeah, and if you look at EWJ, it's indicated to open back up in a position that would pretty much undo this top from the past few sessions. So definitely a big one. I was a little bit concerned about this. I know I mentioned it the other day, because Japan has been leadership, right? In terms of global equities, Japan's been one of the best groups out there, best countries out there this year, and
especially for automakers.
Dude, they came off really hard though. Look at those charts.
Fine, but these are huge bases. Zoom out.
Yeah, they've been blasted, but everything has been since last week. Here's the bottom line. If this reverses and this is just some sort of failed top, I think that's really big time information, because internationally, things do not look good. I have some international breadth charts that we could discuss later, but this is a critical one.
Yeah, Toyota, Honda, back to those summer resistance levels, retesting that. That's what it looks like right now.
They've just really they've given back a lot fast just since last week is all I'm saying.
Zoom out. These things are no joke, man.
I zoom out.
They look like Ford and General Motors upside down.
So you just gonna do Japan, or we got other? Did you look around?
No, important chart in the world right now. Here's slide 2. How is it not? How is this not the most important chart in the world? I know rates. How about this? Let me caveat. The most important chart in the world that nobody's talking about. How's that? Who's talking about this? What do you think, Spencer? What are you seeing out there? You seeing anybody talking about this?
Just you guys. Yeah.
What does it mean to you? I mean, you are a great example of, a lot of investors out there who are coming here every day, listening to our spiel, price-driven analysis, data-driven, not
I mean,
storytelling.
So this reinforces sort of what we've been saying, and I mean, why would you want to be in smaller stuff? There we go. Why would you want to be in smaller stuff, right? That's like you can look at this, or you can look at the microcaps index. It doesn't matter. It's the same idea, right? Why would you want to be in the smaller stuff? We've been talking about pockets of safety. Mega cap is safe. I use parentheses there, right? But it's like, relatively speaking, it is.
I guess, but when stocks have been ripping in the past, these mega caps were outperforming. There was no flight to safety. There was no safe haven. We're in raging bull markets, and these things outperformed then.
Yeah, again, hence the title of today's show is a time to get bullish.
Hold on.
But what I'm saying is, I don't necessarily think that mega caps outperforming the broader markets is necessarily a risk on indicator or risk off. Like, I don't think that money's flowing into these areas for safety reasons.
No, but they've been outperforming, and the correlation has been really tight with the broader market. Throw up my overlay chart. I think it explains why you're saying this is the most important chart right now really well.
In this environment, as opposed to 10 years ago.
Off the lows from last year, the relative trend and the absolute trend have moved in lockstep with one another. You've heard all about it. It's the Magnificent Seven theme, right? It's the same thing. Why would we just assume that's going to change until we see it change? I don't think that this top is going to resolve lower, drawn on the absolute trend, while this base is going to resolve higher in the relative trend.
100%. Right? And you could probably take out the NASDAQ 100 absolute trend and throw in the S&P 500. You're going to get a similar dynamic. But the reason is because what are the companies that are driving the S&P 500 or the NASDAQ 100, but what's in the numerator of that ratio?
The broader market.
Yeah, if growth is outperforming, if mega cap growth is outperforming, then these relative trends are going to be up. I think that the only way that those relative trends are going to be down is if tech and growth and communications are out of favor, like they were in 22.
Yeah, so the same stocks drive both of those indexes.
It's a sector thing.
The NASDAQ just a little more so than the S&P. That's all.
Yeah, more obnoxious than the S&P, right? But in that same direction, right? Similar, it's the same list of the biggest components. They're just bigger components in the NASDAQ 100.
I mean, look, there's a lot of bearish things that we could point to over the past few weeks, right? But the biggest and best stocks breaking back out to new relative all-time highs, not a bad thing at all, right? That's really exactly what you should want if you want higher stock prices for the broader market.
Wait,
like Todd Stone says, your best players.
I was about to say, who was it that says, was it Todd that says the best players?
I think that's a Todd. Sounds like a Todd Stoneism. I've used it. I've stolen that one.
I've said it more than I've stolen any phrase over the years. So shout out Todd Stone.
What's wrong with your best players scoring a lot of your points? Isn't that the way it's supposed to be?
So good, man.
Isn't it? Right?
Yeah, that's all this chart is telling us. We're going back to an environment where the best players are scoring most of the points again. Great. Let's go.
Right. Exactly. Can we cool. Why don't you discuss quickly what's going on in France, Germany, United Kingdom? Why don't you show those? Tops
are going on. Lots of tops.
What if they're not tops?
Right. Great. Of course. Next level thinking there from JC Parets.
Are these are the ETFs, correct?
Yeah. So this would be EWQ.
Germany, EWG, United Kingdom, EWU. So these are dollar-denominated ETFs.
Some are cleaner than the other, but the essence of the pattern remains as you flip through, right? This is distribution. Can we turn it around? Can we flip this now resistance line for some of these things back into support, hook back above these pivot lows? Japan, like I said, is doing it today here in the pre-market. Will the rest of these follow? I think they really need to. You know, it was a great sign, a really representative of a healthy market, the way that we started the bull run last year, with developed Europe really doing great, broad participation around the world. You know, the weak stuff was hanging in there, the good stuff was leading, and then all of a sudden things got thinner and thinner and thinner. We talk a lot when we discuss breadth as analysts. You hear a lot about U.S. market breadth. Breadth has been deteriorating overseas since the second quarter as well. That needs to change. We need that trend to reverse.
Is that not a function of the sector rotation?
I mean, could it be a function of them not having enough tech or growth stocks? Was it you who said that yesterday?
Right. That's what I'm saying.
Yeah. Sure.
Oh, isn't that part of that story that we started out with the Qs outperforming Russell 3000? Isn't this all the same conversation?
Yeah, but they still have to work. right? I think it's important that they're not falling. Even with their staples and industrials and financials exposure, I think we need those lines to start going up again.
I got a good one for you guys that I want to show here before we bring on Mr. David Cox, who's going to give us some more global perspective. Mr. Cox, here's Tesla. We were just talking about this, so I'm going to throw it up here in slide 1. And I got to tell you, I am very impressed. Resiliency of Tesla. You're sitting around 265. Hanging. I mean, does this look like does this look like a bad situation for Tesla? I mean, this thing went split adjusted from 12 to 400 in 2 years. In 2 years, this thing went from 12 to 400. What's the percentage return on that? Nobody said there'd be any math involved. Sounds like a big percentage.
What, from 10 to 400?
From 12 to 400.
It's like 40x, dude.
In 2 years. And then in that period, over the last, let's call it slightly less than 2 years, we've corrected almost none of that. We corrected, actually, we did fall below the 61.8% retracement, and now we're back right around that 38.2% retracement, back to those highs from early January of 2021. I mean, it's impressive to me after such a big move. I mean, this is a legendary move. Has a company ever increased by market capitalization this quickly in history? Check my math. I'm gonna
think so.
No.
I would very much doubt it, but I don't.
Most what is that called? What equity appreciation? There's a word for it. Like market cap appreciation, wealth creation,
market cap growth. You could say it in a number of ways.
In a number of ways. That has never happened before. So you would think that the bigger they are, the harder they would fall. Like maybe like an arc or something. But that's not what's happened. This looks like as healthy of a correction as one can have. We've been pointing to this 165 level, how that's the level that is the not a top level, right? Not a head and shoulders top, but actually just an oopsie. And it's been quite the squeeze ever since, no?
Chris is saying multiple expansion, but
but that's an earnings thing.
Yeah, the earnings have also grown. So the earnings are also growing.
The multiple's lower today than it was then.
Right.
So how many fucks do you think I give about their earnings?
Yeah,
well, I'm just saying it's not multiple. It's not multiple. Yeah.
Typically, yeah, you think that's like when like a rising tide is lifting all boats, and the stocks that aren't growing their earnings like crazy, the price is really appreciating. You'll see some significant multiple expansion during bull markets. But something like Nvidia or Tesla, through the time that JC is talking about, they're blowing up and their earnings are doubling, tripling every quarter. The stock's just trying to keep up.
Multiple expansion is
in other words,
when the perma bears are wrong, they blame multiple expansion.
The P has to move faster than the E to get multiple expansion. If the E is moving too fast, like has been the case with Nvidia and was the case with Tesla, you don't get that expansion, even though you would think there's got to be multiple expansion here.
To quote Strazza yesterday, or maybe the day before, I don't know. It's just re-rating, right? That's all multiple expansion is. It's just re-rating.
That's right.
But in a good way, not.
And what about the multiple contraction? That's one of my
favorites.
And that's what's happening to these bond proxy groups. They're being re-rated because you shouldn't have to pay 25 times earnings to own a cereal company when interest rates are 5%.
I don't know much about expansion or multiples, but that sounds right. What Strazza just said. Why are you paying 25 times earnings for a cereal company? I don't know.
Buy Apple. If you want to pay 25 times earnings for something, go buy yourself some Apple. Did you guys see yesterday? Apple rallied amid a downgrade. This stock almost never gets downgraded. If we went to go check on Koyfin right now, I bet you there's one, maybe two sells.
Downgraded by who?
I'll tell you.
Downgraded by who?
Not important. Not important.
Citigroup? Credit Suisse?
Listen, it's a funny thing that I heard, and the stock was doing fine all day amid bad news. So love to see stocks bottom.
Some sell side analyst doesn't like it as much.
Listen, it stands out.
Bad news?
It stands out because it's not too often that you do get a downgrade or a sell rating slapped on some of these mega caps.
Sell side analysts.
Wait a minute.
I don't know. Maybe they were a boutique shop. I don't know.
I hope those Credit Suisse.
No, it was not
No.
Credit Suisse. It was it was KeyBank. So yeah.
Oh, well, in that case, as long as KeyBank, who knew KeyBank was still around? Didn't they go with First Republic? Or when,
Give
were
it
they
a
one of
couple
those?
months. Give it a couple months. Give
All
them
right.
time. Give them time.
Didn't they used to be Key Corp? Weren't they Key Corp?
How about Todd Sohn making that call that he's surprised banks haven't blown yet?
I think we all are, aren't we?
Okay, fine. Well, you don't like to talk about these things, so I didn't know that.
Should we bring David
I
on?
don't like to talk about them. Is that I don't think that they're relevant. I remember when First Republic blew up, it was like $1 billion bank. It just disappeared overnight. Who cares? That day, Microsoft was up $150 billion. So why does that one random bank that no one's ever heard of matter when Microsoft's up 150 times that?
How about fiscal stimulus? How about the free COVID money? Money machines no longer going burr. So stocks are peaking. Is that what's happening here?
I don't know.
No, that's not it either.
I don't know what a money machine is.
Okay.
Can I get one of those on Amazon?
Sorry, Billy Cunningham. I tried for you, Billy.
Can I get one of those money machines? Sounds like something I'd want.
You remember those memes? Remember when those memes were everywhere?
Yes.
I remember the magazine cover, and it was like
2 years ago.
Right,
yeah,
exactly.
Yeah.
Exactly. All right, bring on David Cox. I want to hear his perspective. Good egg. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. David Cox, one of my faves.
JC, how are you?
How you doing, my man?
I'm good. I'm really good. You?
Good. So David and I were together in late April, and we were sitting next to each other, both not paying attention to the presentation that we were sitting at. I don't know what those people were talking about, but David's whispering, "Hey, you bullish here? You buying stocks?" Right? Remember, we were like in the back row.
I remember.
And yes, we were buying stocks, and yes, we were bullish. And boy, did that work out just fine. Right?
It did.
That worked out just fine. So anyway, it was good to hang out with you in person. How's Canada? Is it cold?
Yeah, no, it's not cold yet. No, it's been nice, but I think it's done as of today, tomorrow. It's I think we've finally seen it. I don't know whether the igloo. I'm not quite going to go into the igloo yet, but yeah, falls here.
Are we buying Canadian equities or sticking in America?
No, God, I was laughing as here comes David with a global perspective. I hope you're not saying Canada. We're not going to waste our time talking about Canada.
First of all, your global perspective can be a negative one. It doesn't necessarily have to be a positive global perspective, but a global perspective nonetheless.
Let's not discuss Canada. I mean, there's just too many dividend stocks, too many utilities, too many banks. Not a good index.
Yeah, but these junior uranium companies,
Fair enough. But yeah,
no. Why are you so anti-Canada?
Oh, I'm not anti-Canada at all. It's just that you look at the 14-year relative strength
in this environment. Excuse me.
I mean the relative strength just hasn't been there, right? You had this kind of small little blip a couple years ago. We talked about it, right? A year and a half ago, you and I. The reality is, it just it's not sustainable, and it's just a market it's a weird market. It's dominated by a few big companies, and they're just not doing very well. And I mean, again, unlike you guys down in the U.S., we've got all these short-term mortgages up here, and these banks are super duper levered to this whole situation of a bunch of collateral that to me looks like a crazy bubble. Translation: bank stocks are weak.
I've been hearing about this mortgage bubble in Canada. I feel like for so long.
Yeah.
Like has it popped yet, or is it gonna pop?
No, but it's because they've already band-aided things, right? They've okay, let's allow people to run reverse amortization mortgages where your mortgage grows every month as you make your payments. I mean, that's not a sustainable thing. The banks are supposed to foreclose, and so the regulators were permitting this, and now that they're starting to wake up, right? They're starting to wake up because, again, unlike you guys, we don't have long rates, right? Everyone takes 5-year terms here. And so those 5-year terms are coming up for renewal. And when you renew your mortgage from 1.8% and it goes to 6, goes to 6.5, 7, not good. Not good, not affordable.
No, that reminds me of 2008. What were those adjustable, right? What were they called?
Yeah.
Variable mortgage, right?
Yeah, ARMs or whatever, right?
Yeah, I don't know. It was a thing. Market crash and everything. It was wild.
Yeah, I watched the Big Short the other day, coincidentally, and a lot of it was like, wow, this is Canada right now. like talking about the whole financial system and the way it's like levered. I don't know. It's interesting.
Do the strippers also tell you about they're flipping houses? Is that
Wrong
when you
scene,
talk
Casey.
when you're talking to these ladies? Is that what they're talking
You're
to you about?
talking to the wrong guy here. Sorry. No insight on that.
You're not doing any channel checking at Rick's?
No,
Or-
I'm not involved. Sorry.
All right.
Yeah.
Just what I just looking for some inside information here. You know.
I hear you. I hear you.
All right. So okay. So no Canada. You prefer America. What about outside of America?
Well, again, the relative strength has been so weak. I mean, I get tired of these sort of, that like the Chinese ADR story. These things come to life and then they fail, and it's just so noisy, and it's so they're sloppy. So for the most part, nothing. Like Brazil wakes up and you give a couple of tries, and you know what I mean. These kind of the relative strength dies away, and so it's hard to be really interested. I mean, the U.S. market continues to dominate as far as I can see, and lots of liquidity, and I don't know, it just seems easier almost, right?
What about these Chinese education companies? They're still doing
Well,
well.
I agree with you.
And
I mean,
they're probably a scam too, but in the meantime,
I mean, you certainly remember some. I mean, there's some old names here that they disappear. They do go to zero. I mean, those kind of spaces, right? But yeah, you look at like a TAL, for example. I mean, it's a great chart. I mean, just broke out there. I mean, that's a great space.
yeah,
Absolutely.
TAL and EDU, both of these things, they
Yep.
bottomed out early last year while everything was still crashing. These things
Right.
were already putting in higher lows.
Yeah, I agree. I agree. No,
There's another one called Go2.
I don't even know that one. Okay.
GOTU. Real juicy. It's a little guy, 700 million.
Okay. Below my limit, so we don't even see
Same
it.
space.
That's why.
Is that below your line?
Yeah. Yeah.
These
And
online education companies were like the fastest growers for years.
what about other developed? Japan? No love for Japan?
Yeah, just yeah, sure. You look at like DXJ, for example. I mean, on a hedge basis, that looks. I mean, that's been a strong relative trend, right?
Yes.
Absolutely. So yeah, am I overly involved? No, but yeah, sure. That's a strong area. DXJ looks like it's obviously been an incredible chart.
I want to
Right?
show David. I made a Canada chart.
Okay.
For you, David.
I don't think
All
he
right.
wants to look at it.
Can we throw up my Canada chart?
If we have to, right, David? We're gonna throw
Yeah, I
him a
got it.
bone.
Yeah.
I don't know. You guys do this a lot over there? You overlay these two?
I actually overlay oil all the time.
Yeah.
In fact, I've got a couple of very interesting relationships that you could see back in '08. When oil peaked. I mean, the Canadian dollar actually peaked first and kind of really drove it down. And that's interesting because the same thing happened last year. As oil peaked, the Canadian dollar kind of led this thing again here. And I'll send it to you guys after I'll post it. But
Okay, that's interesting.
it is interesting. So the Canadian dollar right here again. If you look at it, if you were to zoom out, I think you're looking at about a 14-year. Like it's gone nowhere. Right. So we've still got Canadians that we used to be foreign constrained, right, in portfolios, like, long ago, more than 15 years ago.
Yes.
But there's still Canadians that are like, oh, foreign currency, I don't know, like it's a risk. It's like, there's no risk. I mean, it's until something goes on in this chart, like at least 78 cents, 80 cents. I mean, there's no real, I don't know, it doesn't seem like any.
So maybe gasoline is kind of leading lower because it looks a lot more like Canadian dollar than crude does these days. Crude looks
Right.
good. These two
And
don't.
heating oil for that matter.
Can you
Right.
explain what you mean when you said you were constrained, foreign constrained?
Yeah, Canadians in their registered accounts, so like our what's called RSP, like your 401ks, we used to be constrained to 30% foreign limits, is all the foreign equity you could put in an account. They threw that away a long time ago, like 2 decades ago, but it was there. And
So
so
that would
again,
be- That would be any account that I guess kind of gets government help, but not if it's just a standard brokerage. You could do
yeah,
whatever.
it's not government held. You're right. It's a registered account, so it's registered tax deferred savings for retirement. The government certainly provides you get a tax refund, right, when you
Help,
contribute.
I just mean the tax benefit. Yeah.
Yeah, exactly. So it's gone. So you can have 100% foreign. I mean, and you've been able to do that for more than 15 years, but you've still got Canadians that are like, again, it's like everywhere. Domestic bias happens, right? I mean,
Yeah.
this year, of course, is another disastrous year because Canadians that are domestically biased are just getting ruined because, I mean, our banks are down double digit. Those are like the most commonly held holdings. These pipelines, TransCanada, Enbridge, all the
What's
dual
going-
listed stuff.
So what's going on with these Canadian banks? Why have they been so weak?
Well, first off, I think it's a dividend adjustment, right? Like we've got so our short term, kind of safe, guaranteed investment certificates that yielding 5.5% ish, right? When you're looking at a dividend yield on a bank, sitting maybe 4.7 with price risk, I mean, come on, it's not attractive. So I think they need to come down more, and the dividend yield's just it's too small.
So that's interesting. What I'm hearing is that the Canadian banks, unlike the U.S. banks and European banks and most other banks anywhere, they have more of like a bond proxy characteristic to them because of those really high yields, right? They're almost used as bond proxy vehicles. So they're getting thrown out in the same way that utilities are getting thrown out here in the US.
For sure. And I mean, a couple of our biggest utilities trade in New York, and they're super weak, right? Like ENB and
Yeah.
TRAP, TRP. But you know, when in financial crisis like 07, 08, like our Canadian banks, I think the yields were up north of 8, right? And they're not near 8 right now. So arguably price can bring that and change that. But I just think you've got to offer something compared to, of course, the risk-free rate, because there's price risk and there's frankly downtrends right now. So that's worse, right?
Hey, David sends us over a few charts, so can we actually bring those up here and talk about? Maybe let's start with the first one here, just Google Nvidia. David.
Sure. I mean, if we're going to sit here and talk about, is the market kind of troubled, or is it like, I mean, again, sure, there were more large names we could kind of include in this, like Apple changed, Microsoft, I think, changed a bit, but these two stocks, I mean, they're not exactly troubled, or they don't look in trouble. And so, as I'm sitting here kind of wanting to observe the market, I mean, until something happens with kind of, some big names like this, I don't know. The market looks pretty good. I mean, relative strength, I think, on Google hit a brand new high yesterday. Right, so it's a strong name, and it's a large name, and so it's obviously these are bellwethers. We all need to know what they're doing, but until you start to see these things all break down, I really struggle to sort of get negative.
Yeah, the resilience definitely stands out here. I would throw Meta in this group
Sure.
too.
Yep.
A lot of charts look good out there, and it skews towards the mega caps for sure.
Without
Spencer,
question.
can you throw up there the new slide 2 here, which kind of expands on that Google making new relative highs you mentioned, David. Communications as a group, which also includes Meta, making new relative highs as we speak.
Yeah.
This sector has been in the top 3 best performers every quarter this year, including last quarter. Every quarter this year, it's been a top 3 performer after being one of the worst 2 performers for 5 consecutive quarters.
Right.
So after being down in the basement, just the worst place to be for 5 quarters, it's now been the best place to be all year, basically. One of the best places to be consistently, again, including last quarter, which I thought that's impressive. The only other positive sector outside of energy last quarter.
Yeah, I mean, well, but almost 50% of that is Google and Meta, right? So, I mean, this is the only sector right now that when I look at, we define, short, intermediate, long term. If you look at the relative strength, this is the only sector. I mean, energy, sure, it had a recent move again, but this has been the most consistent sector. So a relative strength, user, investor, yeah, without question, you own this. I mean, how
But
can you not?
do you own this, or do you just own the top 2 components? Because if I chart this relative strength trend on an equal weight basis with something like RSPC and equal weight S&P 500, it's been moving lower this year.
Right.
It's really just these big boys doing this, I think.
Yeah, I agree. So I guess the way I would answer that as someone who, has to steward and manage other people's money, I mean, it depends on risk, right? So the truth is that there's less daily price movement, or, ATRs is how we use volatility. There's less volatility in the XLC than on Google and Meta themselves. And so I can get away with taking the exposure a little more diverse. Yeah. Do you give up opportunity if it's pretty obvious yeah, you do. But at the same time, it's about balancing risk and reward. So I'm not saying all investors have to kind of care. But again, obviously components of portfolios matter. So yeah, that would be my only answer. So yeah, we do. I own it,
So you got your eyes on mega cap tech and growth right now, like a lot of people. Anything else? Anything else out there look interesting?
Well, I mean, sure, there's good stocks. It's just that they're not kind of super consistent all over the place, right? Like the home builders were like it was all over them, but they kind of, they've shown a lot of wear and tear here. So so from that perspective, they look like kind of, your has been kind of areas. Obviously, kind of niche areas like, this uranium run was pretty big. Of course, those things have come off here in the last few days with a bunch of volume too. So when you look at it, it'd be interesting to see kind of certainly like, you talk tech, you got the semis, right? So like some of those semis gave up as well. So when I look at the semi space, really strong performance out of like, CDNS and SNPS and Avago still holding it pretty well. Clack kind of has been a pretty strong name. So
I like how you call it Avago still, David.
Oh yeah,
So
sorry.
You also call it Citicorp?
Yeah, whatever. City, whatever. I actually call it Citibank. Was it Citicorp? Like whatever back then.
Maybe you're still relatively young. The old timers call it Citicorp.
Okay, hang on a second here. Like, you clearly know that I'm older than you are, JC. So like, what?
Yeah, well, a little bit. But
Yeah.
you think
Anyway,
like a youngster. You think like a
yeah,
youngster, David.
for sure. Young at heart, for sure.
Yeah.
So,
Speaking of thinking like a youngster, how's that crypto portfolio? Is it
well, I mean, obviously,
non-existent or
crypto's been over. Like, sorry, I'm gonna say Bitcoin because the truth is, like, the whole mess of the whole space is, to me, is whatever. It's a bunch of noise. But look at Bitcoin in September, right? All risk assets were down. Well, Bitcoin was up,
that's
and
right?
yeah. Like, obviously, this chart's a bit silly because it seems like it pretty much always goes up. But we just went through, look, a 5-week period that on average in the last 12 years goes down. And here we go. We're embarking seasonally on a strong period for Bitcoin and a strong period for equities. But the chart, I think is holding up really well. I think consolidations are good. I think that, this whatever 28, 28.5, and then of course 30, 31. Sure, we got some levels to kind of exceed, but relative strength, I like it. And I think the theme and narrative exists, and I think I get it. And so the chart lines up.
I'm with you, my man. No,
Yeah, I know
listen,
you
I
are.
appreciate it. You've been pounding the table on this for some time. You've been right.
Well, it's again, it's about risk and reward, and you look at this year, like, I mean, just take this back. Let's go back, when the banks collapsed, right? And you look at Bitcoin. So Bitcoin, literally on the day that all those banks collapsed, like SVB or whatever was the first one, you had this daily sell off that went down. We went below $20,000 for a few hours, right? And then you had immediate buying come back in, and that's again, when you look at news that has the potential to change things, as you know, and when price kind of not only sort of it doesn't follow through with what the news says, it's nice. So when risk assets and the world goes into calamity, Bitcoin came right back that day, and that's good behavior. I don't know if you got that chart there, but
You want to throw up the Bitcoin chart?
I'm just saying the daily chart there back when the banks collapsed was it was good. It was very good performance. I like to see that.
I mean, man, I gotta tell you, you would think that with the correction that you saw in growth, I mean, I understand more recently you've seen some more strength coming into growth, but had massive corrections there. Bitcoin was up in that environment.
For sure.
Again, I would not have expected that. Bitcoin tends to stay under pressure when the dollar's been strong. You haven't seen that either. Again, the resiliency is really, really interesting there.
Well, even to kind of expand that a little bit, you think of growth and tech and all these names and some of the things we just talked about. The resiliency in the face of these yields, which are like clearly going up. I'm impressed too. Like, like they could go and kind of crater, but they're not cratering. So I'm pretty impressed by that because this yield charts, big picture, I think they're going up, and there's just been no real kind of pullbacks in yields. And the fact that growth right here is holding in so much better than value. Obviously, there's a correlation on the value side, but it's impressive. It's good, right?
And when you look at Bitcoin, you're considering it like super ultra growth, like even longer duration. Is that how you consider it, you think?
Well, yeah. I mean, to me, there's two ways, right? To me, there's a story, and I think some people understand what its use is, and some don't, and of course, some it's just a volatile asset. But I think there's a use case, and I think you could see governments are in trouble, kind of looking at how to deal with and regulate and these things. But at the same time, from a price perspective, we had a massive washout last year.
How
In,
do you
in
how do you use it?
well, I think that there's a use case, and I think the use case is going to grow. And I look at, sometimes I think we're biased. We sit here in North America and we say, oh, whatever, it's
Right.
a volatile asset. But look at all these countries that don't have the opportunity to go and do things with their money, right? They're stuck. They're literally stuck. And you introduce things like stable coins, give them an opportunity to get themselves out of their own currency, give them an opportunity like this concept of being able to throw money and send it over the world quickly. Come on, like the banks can't even do that. So I think the use case is actually huge. And when you look at the whole kind of idea of how much money gets spent on sending money to third world countries, and you look at how kind of Bitcoin changes that, I think it's a very interesting. I think it's going to keep developing for sure. We'll jump to the cues here and what this is.
Yeah.
So this is stage two, like Stan Weinstein stuff, right? So when you look
Sure.
at the Nasdaq 100 here, bottom panel, sorry, the circle's off there, but on the right side you can see 53.5%. So 53.5% of the stocks in the queues are in stage two uptrends, and we're defining those as above a rising 200 and the 150 over the 200. Again, that's really healthy. In fact, I just posted a whole pile of stage two charts this morning on Twitter, and you'll see, I mean, the S&P 500 back below 30, the Russell 1 back below 30. And 30 really represents kind of a line that if you look at the, from history, when you see a market recover above 30, it's very, very important because again, obviously more stocks bubbling up and improving is good. But again, relatively, yeah, the NASDAQ is the one that's the strongest market again. I lost a little bit of relative interest this summer because you could start to see that fade a little bit, started to kind of buy into the diversification argument. But right here, right now, after the sell-off, we're back to the NASDAQ here that's showing the relative strength.
Couldn't
And
agree
that looks
more,
really
David.
healthy. Sorry?
I couldn't agree more. Right there with you. We did something similar internally where we kind of scripted out and defined what a new uptrend would be. It was something like, above the August highs from last year, rising 200-day, momentum
Right.
in a bullish regime. And we got to the same place as you. We're just over 50% still there. So
Right. Looks pretty healthy. So I think the people that are really trying to be bearish here are going to have to kind of go and use something more than some kind of silly narrative that sort of doesn't match price because again, like obviously right now, literally in the short term, the Nasdaq bottom last week. It's the only market that hasn't sort of, again, it didn't bottom again in the last several days. That's good news. And I don't know,
So much relative strength there.
relative strength. The relative strength should not be there if this market's about to kind of
Right.
crater. So let's put the
Right.
seasonality in front of us and remember that corrections in August and September, they're normal. So let's not get totally
It'd be
upset.
weird if it would be weird if the market wasn't acting this way.
Absolutely, But
Yes.
I bet you, like, I think I don't have the data, obviously, but I think it's probably been a very challenging year for many because I know full well that a lot of people certainly did not come into 23 excited. They did not see the fall bottom as the fall bottom or, a useful bottom. And now they sit here, and I'll bet you a lot of people got caught kind of chasing, too late. And of course, they get hit with the correction. And,
David, are you saying that the sell side and economists got it wrong again? Is that what
uh,
you're saying?
I'm saying that I
And
again
again, is
question.
that unusual? Is that
No, it's not unusual, but I just still shake my head that it exists. Why do we have to sit here year after year and have the same thing? You guys were already joking about
so
analysts
that
this
we could
morning, right?
use the data,
Oh,
David? We
right.
need the
I
data.
agree. We do need the data.
Like
We
I
do need
can't
the
tell
data.
my grandmother that she's the best contrarian indicator ever because then I lose the data. I
True
just
enough.
gotta let her keep sharing her observations with me.
We need barometers, but yes, I agree. You're right. It would be no fun if there was. You're right. I'm sorry. Stroke that from the record.
We should have like kind of like this like fund that we all donate to keep like economists and journalists employed and like the 3 sell side analysts that still exist. Like we need them. Like
Right.
I wouldn't say we need them, but life is better with them employed.
Yeah,
Am I wrong?
I agree, and there is some entertaining charts. I mean, again, when you I haven't gone to the effort in a while, but when you plot like the analyst recommendation, stock peaks, it's coming down, the recommendation comes down behind it, right? Of course, comes down behind it, and then slowly crosses, and then the stock bottoms, and then it comes back. Like I don't know what it's entertaining.
I like it when they right when they upgrade it from sell to hold. It's like, what do you mean hold? You told me to sell. I don't have anything to hold.
I know, but it's the same thing. I had a conversation with someone yesterday who was like, my advisor says it's a great opportunity, and he's like, but if you don't ever have any cash, you don't. If you always hold, you don't have opportunities to take advantage of because you have no
That's right.
money.
That's
So
right.
you have to obviously change your risk profile from time to time, right?
I hired a financial advisor and he's like, all right, JC, we're going to allocate a certain amount every month for the next X amount of months. I was like, oh, that's a great idea. I wouldn't have thought of that.
Yeah, the old dollar cost average.
Yeah.
Works like a charm. All right. David Cox is portfolio manager at Raymond James. David, thanks for coming on.
Hey,
Thanks,
thanks.
David.
That was a lot of fun, guys.
All right.
He's the man.
Have
him more often.
He says that a lot of people are probably having a tough year. What he means by that is, look at how bifurcated even the major averages are. And the Dow is now flat on the year. The Russell 2000 is lower on the year. And you did the right thing and stuck with the NASDAQ 100 and big growth stocks, you're up 35% on the year. 35% performance gap between two of the large cap major averages, the Dow and the NASDAQ 100. They are so different. I don't know. I guess my point is you could have easily messed this up. As good as some stocks have been this year, you could have very easily messed this up. This is what I'm talking about.
You know what? There should be a fund of the major indexes. Like, and I don't know what the weighting would be, but that would be a fun exercise, right? If maybe like an equal weight fund of the 4 major indexes. I don't know, or not equal weight.
That seems like too much math to just have a broad market.
Yeah, Spencer, I love you, but that's a terrible idea.
Well, all right.
I've heard some dumb things come out of your mouth.
Hey,
that one makes little sense.
Why, if you wanted to do that, Spencer, you would just equal weight your portfolio and buy every one of them. So they're really
it'd be easy to
have like a quarter S&P, quarter smart, you know.
Well, or no, don't equal weight it. Don't equal weight it. Market cap weight it, right?
Can you just? Isn't that the Russell 3000? Isn't that IWV?
Just about.
Yeah.
He's saying you take the weightings of each one and aggregate them by averaging what weight is coming from which one. It's too much math to do something really just a broad basket. Listen, the point is, why not just buy the strongest stocks? I mean, what were you doing if you were hanging out in micro caps and small caps this year? They never gave us any indication that they were ready to start trending higher. The NASDAQ has been working this whole time. I don't know.
We'll bring Kimmy on here, but I want to just share one of my favorite quotes, and I wish I could. If anybody knows who said this, please let me know because I'd love to give them credit. But the best saying ever is the only way to make sure you own the strongest stocks is to buy the strongest stocks.
Yeah. No, that's yours. You own that.
Definitely not me. I'm not that creative. That's a really good quote. It was definitely not me. I want to know who said that. Somebody find out. Our chat is smart. Somebody find out who said that.
The only way
to make sure that you own the strongest stocks is to buy the strongest stocks.
So it's a silly phrase, right? But what it really means is it's not a secret. Everybody can go and check what the strongest stocks are. So if you're not in them, then what are you doing? It's kind of what that means to me. You can go punch in a relative trend on TradingView. It's free.
That sounds like a Peter Lynch thing. I don't know.
Doubt it. Peter Lynch wants you to walk around malls and no.
When I searched that quote just now, I got one Google result, and it's for you, JC. So I don't know.
I swear, I would be happily to take credit for this one, but I'm telling you guys, I definitely did not make it up. I promise.
Whatever. All right, let's see what Kimmy's watching today.
Kimmy.
What's up, guys?
Let me ask you this. What's up? So you are always thinking like, Fed's tomorrow. I don't want to do much ahead of that. You're kind of, making position sizing and portfolio decisions based on these events. You got a jobs number tomorrow, or a lack of jobs.
Today's Thursday.
I really don't know. Right? Today's Thursday. Yeah. So that's tomorrow, correct? Are you allowing that to impact your decision making today, or because that's tomorrow, you're worried about it tomorrow?
I'll worry about it tomorrow.
Got it. But it will impact any overnights that you take, right?
Yes. But we'll see how the market trades today. I mean, yesterday was a first push up in a little bit. Let's see if it hangs on. The Qs really are the ones typically, that had the most momentum yesterday. The Qs broke above its 8-day moving average, around like 358.50 or so. It's above that still. We'll see if it hangs on. Maybe it back tests the 8-day and then trends back up to maybe 360, maybe like 364 or so. We'll see if we get a push in here, if we're going to move higher or not. Like I said, the Dow's only 30 stocks, so it's hard to look at that. But you look at the Dow, the Russell, those two are below the 200-day moving average. The SPYs, the Qs are not. They're holding on. The S&P or the NASDAQ, however you want to say it. So we'll see what, if this is it, we have a bounce in here, or we have one more push lower, right? there is potential for another push lower, but time will tell. I
It's
said
really
everybody in the
interesting.
room. What?
I was gonna say it's really interesting the relative strength we're seeing in tech and growth overall,
Right.
the Qs, technology hanging in there, like just fine.
Yeah, I mean, listen, we could have a total ripper, but over the next few months or something, or maybe it just like rips really fast,
Wouldn't
and
that
then
be perfectly normal?
it could, yes. I mean, we could have a nice little ripper and then pull back in. So, I
In
don't think
February.
what?
In February.
In February. That's right.
Right, which-
February's usually weak, isn't it?
Yes. You buy in October and get yourself sober. You
sober.
rip into the
Mhm.
holidays, Santa Claus rally, blah, 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 January barometer, and then you get that correction in February. That would be perfectly normal seasonally. And boy,
Yes.
has the market been trading along these seasonal trends so closely.
Right, exactly. So it has been very close, but sometimes October you get a little bounce and then a dip back lower.
Mhm.
And then we get one more dip back lower and then back up. So almost like a W pattern, kind of, let's say. I make things in my head. I try to like forecast, like see where it could go, or like I say, oh, maybe if this pattern develops, I love how you were talking with David Cox on like, when a fundamental analyst says hold, goes from buy to hold. What the hell is
From
that?
buy to hold. That's my favorite. That one, and when they upgrade Weight Watchers to overweight, those two get me every time.
Yeah, I mean, I don't even understand what that means, but you know what? I'm technical, so I don't know.
I don't think they understand either.
Yeah, I have like
Kimmy,
no idea. They're like or wait. When they do a price target, just say 140, but the stock
those
is at 160.
That's right.
No, those are bad. When they upgrade a stock but lower the price target, or downgrade a stock but raise the price, like what does that mean? How do I interpret?
I don't
how-
understand how fundamental people look at that.
How should I interpret that information? I don't even know what that means.
Thank God for the charts, guys. Thank God for the charts. No
Thank
fundamental
God.
here.
What would we do without it? It's the only truth in the market. And Kimmy, you do a hell of a job at following this truth. 3 for 4 yesterday. Caterpillar, Tesla from the long side, which we were just talking about. Nvidia also from the long side. One loser. I like that your eyes today are on what Strazza likes to call one of the most important indexes in the world, which is software. And you're looking at snow. I like where your head is at here, Kimmy. Talk to me about this trade.
Well, I kind of recommended it yesterday at the 150, 190 level, and it kind of pushed through later in the day. And I just said, snow's going, snow's starting to move. So I have to see how it acts. Now we have a gap up, so that's going to make it difficult. It was a nice little rounding little pattern there, gap up, rounding pattern. So we'll see if it pushes through. I don't love gap up, so I have to see if it pulls in some, fills the gap, or maybe just keep, it could be a gap and go and head straight up to like the 155, 156 area, so real quick. So I have to see.
All right,
Hey
Kimmy.
guys, gotta hop.
Go do it, Kimmy. Go do your thing.
She's heading to her trading room. If you don't know how to get in, check out the link in the description. It's there all the time, permanently, and she calls out her trades in real time. She talks about them, not like we do here, where we talk about them the next day. She actually calls them out live as she's making them. You can follow along with her there. Okay, let me run through a few more news items here. I mentioned the RIVN thing earlier. I think we do actually have a RIVN chart. But yeah, they are doing a convertible note. They're raising $1.5 billion. So, hey, kudos to you. Kudos to them. They're raising money. They need it. There are worse ways to do that. Also looking at Clorox. They warned last night. They gave some guidance. They said they actually had another. Well, they didn't have another, but there was another cyber attack. Remember, there was a cyber attack on the casinos the other week. Now there's a cyber attack on Clorox, and they warned that they're going to post a loss for the most recent quarter after this cyber attack messed up their business a little bit.
I don't think this is the first time for Clorox either.
I don't know. I honestly don't know.
I feel like this just happened in like 2020. It just had a big issue right after COVID. Was that an accounting thing? All right.
I don't know. Okay. We've been crapping on sell side all day long, but this one is interesting. Sometimes they do good stuff, even if it's not on the individual stocks. Citigroup did an analysis yesterday. This is following up on our conversation with Todd.
Yeah.
And I've been wondering about this question for a long time. How do these ETF providers make money? According to Citigroup, 1/3 to half of the more than 3,300 US listed ETFs are not able to cover their annual operating costs. So the firms that run them at a loss, which according to this one, which I thought was interesting because we were talking
I think we knew that. JC, you knew that.
Did you?
Did I?
1/3 are losing money managing ETFs.
1/3 to 1/2 of the ETFs.
I don't know anything about ETFs.
Yeah. Okay, fine. I thought that was interesting. A couple more things here. This is really fun, actually. Walmart. Did you guys see this one? No. Some executive gave an interview yesterday. Walmart is seeing a negative impact on shopping from people who are taking Ozempic. And the reason that they know this is, they're also a pharmacy, right? So they can follow you around the store essentially, and they're seeing their customers who are on Ozempic are buying less food at Walmart.
Dude, stop. Walmart came out and said this?
Yes, Walmart said this.
So
Can you throw the chart of Walmart up?
This is that weight loss pill?
Yes.
Dude, I'm so tired of hearing about this thing.
Hold on. Can we throw the Walmart chart up there? Let me tell you something about returning shareholder value, Mr. Spencer. This company returns shareholder value. How do you like me now, Strazza?
I mean, yeah.
This stock, what was the comment you made with this?
It returns shareholder value.
Yeah, sure. Mm-hmm.
Yeah, it's a good company. We knew this.
Just saying. That's
the largest
public company's job is to do that. Why don't you show the next slide 3 here, which is General Motors and Ford. They like to donate money to employees instead of returning shareholder value. How do you think that the market is going to punish them or reward them for their decisions? Do you think it's vulnerable for a break, or do you think they dig in here and we get a squeeze higher? What do you guys think?
Most buys have been mistakes in these companies. So hard for me to get excited about either of them, chart notwithstanding.
Strazza, any positive views here? You willing to take the other side and think they dig in, or is this just only a matter of time before they break?
Hey. Listen, stocks that are testing their range lows right now are vulnerable, right? If this corrective action lasts any longer, charts like this probably go, and you don't want to touch them with a 10-foot pole. So I don't find this interesting until the broader market kind of finds its footing.
You don't like these as shorts?
I'm not shorting anything. I'm not looking for shorts.
You don't like initiating shorts on a break of support?
Go for
it. Retest the 2020 lows.
You can initiate a short on a break here. That would be fine. That would be a responsible trade to make. I don't look for shorts in bull markets.
And you think we're in a bull market?
Yes. Mm-hmm.
Okay.
Is that okay?
We're all entitled to our opinions. I ask you questions to get your answers. I thought that was a valid answer. Are you questioning your response?
No, not at all.
You're sticking with it. You don't short stocks in bull markets, no matter how shitty they look. And since we're in a bull market, you're not going to be shorting these stocks. Do I have that right?
I'm selling puts in XLK. I bought AMD yesterday. I own some SE. I've been a net buyer since late last week. I'm not looking for short exposure.
I continue to think, my friends, that as this bull market progresses and ages, this bull market that Strazza says that we're in, as this bull market progresses and ages, and correlations continue to come off and head towards zero. So understand, when correlations across stocks and across the intermarket landscape were all one just a short time ago, as time has progressed and this bull market that Strazza says we're in has aged, these correlations have come off. So wouldn't it make sense in the 3rd inning, 4th inning, 6th, 7th inning, 2nd inning, whatever inning we might be in, wouldn't it make sense to be less I'm all in, I'm all out, I'm all in, I'm all out, because correlations are closer to zero? Wouldn't it make sense to have both longs and shorts in what some might call, Mr. Strazza, a stock pickers market?
You're saying to have longs and shorts.
Is there anything wrong with that?
No, absolutely not.
In this part of the bull market that you say we're in?
This gets into a bigger thing. Yes. A prudent investor could very much build a nice portfolio of longs and shorts. I've seen shorts work. There have been some great shorts. We've written about a bunch of shorts that have worked all year, really, in the short report. They're utilities, they're staples. You can short the financials. I think you can short the banks right now.
Telecom. Telecom.
Telcos, yeah. Shorting is not my thing, right? Like I'm not great at it. I don't like it. You have to treat your shorts differently than your longs. I'm not the best.
Are you saying shorting stocks is un-American?
No, listen. I focus on the things that I know that I'm good at and where I have some sort of an edge. I have found over the years that I don't really have an edge shorting.
But what about focusing on things that
I won't sell it soon enough? It's a whole thing.
What about focusing on things that other people are not good at? For example, Ford and General Motors are terrible at increasing shareholder value. So why wouldn't you profit from their lack of ability to do so?
I could find companies that are great at doing things right now and get long those names. I think there's plenty of long opportunities out there. Listen, I will come here and tell you when I'm shorting things. It'll be a more dire environment than we're in now.
I don't know, man. I think there's opportunity here from the short side, and if they break,
I'm literally here saying there are good shorts out there.
They might not break. They might dig in and squeeze. Right. They very well could. What's the short interest on these guys?
Let's see. Probably not high. That I would be stunned if it was in double digits. That would blow me away. Yeah, GM 2.5%. Ford, I don't know. My data source sucks. So
I think you could still get in. There are some really actionable things right now in growth and in tech that look like these failed tops, and the market's taking its time here this morning.
How come
making some trades?
How come there isn't a higher short interest in these things?
Because come on, what? Because like this is
Ford
like
and GM, they traded like 5 times earnings, dude. They make more money than Tesla and have.
So people like the high short interest is on the super multiples, right? Yeah. That's what they're. Yeah. That's where shorts live, essentially,
or low float, and these have a gajillion shares. So.
These are viable businesses, right? They're decent businesses. Yeah.
No,
I don't think they're like
that's a question
of going bankrupt anytime soon.
I hear the opposite. You don't think all of these things are zeros? You don't think Ford and GM are zeros, and all these people begging for more money are now going to be begging future employees for more money?
I think the market is very forward-looking and has been discounting them as companies that won't be around forever. But I don't see 90% Teslas on the road right now. I see 1% Teslas. So this is going to take time. And frankly,
seeing a lot of Toyotas and Hondas.
Listen, I live in Florida. I'll tell you for a fact, some people will simply never drive a Tesla. And that's always going to be an issue. There are people down here where I live who will never drive those cars. They will have to be forced to. They want their trucks, dude. They want their diesel. It's like a thing. It's a drug. The brum, 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 the big truck, the big tires.
Are they overcompensating for smaller things?
I don't care what they're doing, but I'm telling you, there is a sect of our population that never wants an EV. You don't agree with that? You don't see that?
No, that's definitely true.
No, I believe you. I believe you. I don't live near those people, but as you head west, you start getting towards those people more.
Yeah. There's plenty.
Yeah. I'm with you. All good. I listen. Different people care about different things, right? Different strokes for different folks, right? You know, I hadn't bought a car in 20 something years, so for me, like any car is like an upgrade, you know. So. You know, I got my Denali, my Yukon Denali. This thing's a beast, man. I love
the Denali, dude. My car is too big. I can't figure out ideas of things to put in it to fill my car. Yours is like twice the size of mine.
I know, but my kids in my house are like multiplying. There's just more and more kids.
Right. No, I know. Yeah. I
And
can't.
now my daughter starts saying the things that I say. She's like, "Mommy, do we have all the kids? Do we have all the kids, mommy?" A lot of kids, man.
Should
A lot
we
of kids.
do a hot corner?
Let's do it. Hit it.
All right.
9 AMD calls. Let's go.
So hot right now.
All right, give it to me.
You know, is Sean coming on today? I want to talk about options premiums.
Yes.
Okay, great.
It should be. Yep.
Hold it. Yeah, I don't know. You guys want to buy the Teledoc? The Real. Remember that one? That was a COVID name.
Oh
My
my
sister works
goodness.
My
Real.
sister works there.
Is she still there, JC?
Yeah, she's there.
Does she have stock?
That was a COVID darling, if there ever was one. Whew.
You know what companies I wouldn't touch even more than the autos, though? The airlines, like American. We're here. Somebody selling puts in American Airlines yesterday.
Wait, how about this
Airlines
Remax?
are not viable businesses.
How about this Remax? This stock's at an all-time low. Who's buying?
I
Who's
didn't
buying
know
a?
it was public.
Who's buying a real estate company right now? Like a?
Isn't Compass Diversified also a broker?
Magnolia Capital Fund.
Hold on. There's 2 real estate brokers on here right now, right? Isn't Compass also that?
I don't know honestly, but
Cody, CODY.
the housing market is in a frozen paralysis. There's no one's
COTY is an industrial conglomerate.
who is.
Yeah, but it doesn't say what they do. And there's a lot of things by the Compass name, particularly Compass Real Estate. I'm wondering if that's them.
Food services, electronic components, consumer services, manufacturing. So probably not housing.
This looks like a dividend trap. 5.5% yield, $1.3 billion market cap, trading near the lows. Listen, none of these charts look good today, so I don't even think I didn't mark any up. I don't know if Alfonso did, but
these are all funds that were. It looks like they're adding to positions. They were already insiders, so they already have big positions. They're just taking advantage of this weakness to buy more. That's the takeaway in the hot corner, right?
Yeah.
So a chart like Teledoc could get interesting, but there's work to do, right? Like I don't hate these little bear trap, little shake and go type of patterns, but Teledoc is really just falling off a cliff right now. You see those pivot lows?
You got to get back above 23 to even consider. So we're nowhere. We need like a 30% move just to even look at it again.
Remember when these stocks used to move 30% in a day?
Yeah, during COVID, because we were never going to have to go to the doctor's office again.
It was that, but it was also you'd wake up at 6 a.m. and they'd be up 5% at 6 in the morning, like clockwork every day for like 3 months.
That's what I'm saying. The narrative was no one's ever going to go to the doctor's office again because why would we? And this is saving insurance companies a ton of money, blah blah blah, right?
Yeah,
right.
I've done the Teledoc thing. I don't know if it was Teledoc, but it was definitely a doctor's visit virtually. And I also did a DocuSign. Was it a DocuSign?
You could also just see a normal doctor, and then that doctor could say to you, "Hey, let's meet over Zoom." So
wait, I did a telehealth thing like a month or so ago. I don't know if it was like a good deal for me or not. Like because it cost me $90 and I didn't even talk to a doctor. Like so, I'm not quite sure.
Like a very good deal, then, Spencer.
Sounds like you got hustled, bro.
Well, I mean, it was like a skin thing. So like, I guess you don't need to talk to a doctor. You just send them a picture. But like, I don't even know if that was. I don't know. Whatever.
I want to talk about uranium stocks. If we could throw up CCJ and take this comment in the chat. Also, Rachel, funny comment. My girlfriend would really like that one. We'll see. CCJ, right? So, what is the story with these uranium stocks? Somebody made a funny joke with a pun in it about how they're exploding or blowing up. I don't know. You have to think of Kimmy. Kimmy does this, right? She talks about her stocks as her babies, right? And what she really means by that is that she knows these names. She knows the character of these issues, how they rally, how they correct, what that might look like, right? Because all stocks are different. They're not all going to trade the same. We have different betas, right? So all these stocks carry different characteristics. They react differently to news, to earnings, yada, yada, yada. CCJ is a very high beta cyclical name. When it goes, it goes. In other words, from 20 to 40 here this year, a nice double. And when it corrects, it's going to correct sharply, right? So one way that we could figure out just how severe of a corrective phase this is by just fibbing it out. So I'm just fibbing out the advance off the year-to-date lows here. I haven't even retraced the first Fibonacci retracement, which was 38.2%. I mean, JC, any comments? What I'm trying to say here is that this is nothing unusual at all. For the way that these stocks advance, you have to be okay with the fact that when they do pull back, they're not going to pull back like a Coca-Cola or a Johnson & Johnson.
But isn't that why we bought calls as far out as humanly possible? Because they were cheap as hell?
Probably.
Yeah. You know, that's why we do that in those environments. When you're in a low vol environment, when premiums are as cheap as they get, take advantage of that, the inexpensiveness. I don't want to say cheap, but the inexpensiveness of those premiums, and go out as far as possible. You know, I was having a conversation with someone the other day. They're like, when we do options trades, are they more short-term or are they more long-term? And I'm like, well, it really just depends, because if volatility is high and we are taking advantage of that high volatility by collecting income, it's going to be a relatively short-term trade, 45 days. We might even be able to take profits in a week or so. It happens all the time because volatility mean reverts. So if volatility contracts so quickly, we're booking our profits in 7 to 10 days. And it's a super short-term trade. But that's a function of the environment that we're in versus something like uranium, for example, where we bought calls going out 6 months. So it turns into a longer-term trade simply because it's so cheap to do so. Why wouldn't you?
Yep.
Those are my thoughts. How do you feel about that? I thought
Yeah,
that was a good answer.
I want to bring Sean on and talk more about premiums.
Speaking of which, why don't you hit it, Spencer?
I can do that. Sean, are you ready? Yeah, he's ready. What the hell?
You're right.
He's always ready. He's a
He's always ready. You know, I had a buddy back growing up. His name is Steve. And whenever anybody wanted to do anything, we all knew we could count on Steve to do it. His nickname was Standby Stevie. Anyway.
All
By the
right.
way, and also Strazza used a verb that I'm unfamiliar with, but I think I like it. When he said, "I'm fibbing it out." I'm fibbing it out.
I like it when they use them as verbs.
Yeah, that I'm going to try that one on at my next cocktail party.
People have been using that, and everybody seems to like it. I think it's catching on.
By the way, maybe I just missed it over the last 2 days, but has anyone called out the handsome haircut on Steve Strazza this week?
They messed it up. It's not good.
Yeah, that's why we didn't say anything, Sean. Thanks a lot.
You got to do natural hairline here. You go to some of these barbershops and they just start like, I don't know what it is. I don't know, because then it's going to grow in all funny. I don't know. All right.
So look, guys, I have a teachable moment here for options traders.
Yeah.
So JC and I did a little YouTube video yesterday talking about a strangle we put on in XLK, a delta neutral premium selling trade, a conservative bet by all measures. And I got an email yesterday from one of our readers of our free email newsletter that goes out, which I'm sure Spencer will flog later when we're done talking.
Yeah. Oh yeah.
Anyway, he challenged me a little bit in a friendly way, of course, friendly. But he said, "Hey, my broker is charging me $4,000 margin to put on this strangle." Mm-hmm. Which, by the way, it seemed high because my broker is only charging me $2,200 per one lot. But anyway, that's a different argument. But let's just go with his number.
Charging you?
Charging's not the right word, but
charging's not the right word.
That's the margin requirement. Sure, you have to have
margin requirement. They're not charging you that.
Right. It's hitting my buying power.
Yeah. That's a hell of a rip if that's what they're charging you.
Yeah. So anyway, he said my brokerage is requiring $4,000 margin. And if we're only going to make $125 on this trade, if it works out, this is per one lot. He's like, the math doesn't it seems like the percentage gain on that is terrible, is basically the argument he was saying. And he's both right and wrong. He's right because when you look at $125 gain on a $4,000 margin requirement, in percentage terms, that does look terrible. What he's forgetting, when you're putting on a delta neutral strangle credit spread, the trade, the way it's structured, the trade has a higher probability of success. So you're getting paid less for a higher probability of winning. There's no free lunch on Wall Street. There's no free lunch in options trading. This is no different. Now, what he's also forgetting is that, yes, it may be requiring me to post up $4,000 margin. And if the trade works out, my high probability bet works out, I may only make $125. Okay. However, what he's forgetting is this trade will likely only last for 3 or 4 weeks. All right. If he does that trade every month, requiring $4,000 of margin using his math, and it worked out for him because, again, it's a high probability trade, and it worked out for him 12 times over the course of a year, he earned 37.5% on his $4,000 margin. Is that terrible? I don't think so. But anyway, the real point of all this I want to tell people is that when you're putting on delta neutral spread, it's very tempting to look at the margin requirement and calculate your returns based on that. But that's kind of the wrong way of thinking it, because if you were to lose on this trade, it's very unlikely, if you're trading a one lot, it's very unlikely you would lose $4,000. It could happen. Of course it could happen. But it's very, very unlikely. We're talking 7 sigma event for you to lose that kind of money on that trade. So don't look at the margin requirement on a naked short option trade and use that to calculate your returns. You're just setting yourself up for frustration.
I was surprised at how high the margin was also yesterday to sell those puts. Sean, I want to talk about the actual premium that you're paying, right? Like yesterday in our analyst meeting, really quickly, you just mentioned pretty much, no, I'm not looking to buy premium because it's elevated right now. As somebody who has plenty of experience making directional bets via options, sometimes you just have to pay up, right? Because those moments where you're going to want to get involved the most, the market is smarter than us, right? Yep. So the premiums are going to be high. So I thought that might just be a good lesson or discussion to kind of go through, right? I'm out here yesterday, I'm thinking, wow, we are really set up. If we get, we get some sort of tradable low here and really rip off these lows, I need exposure. I look at these calls. Sure, I sold some puts, but I want to be long calls. I'm looking at some of these calls. I'm saying, all right, this is a little pricey, but I'm going to buy them anyway. Am I crazy? What is going on there? What's your take?
So look, you're not crazy. Here's the thing.
You're less crazy if you're financing those with a sale.
Yes. But here's the thing, guys. When options prices are higher than normal, right? That's not a red light that says, no, I can't buy this, and no, it's not going to work. It just means your trade's going to have to work harder for you to make money. Now, we talk all the time. Sometimes you got to take the hard trades because the hard trades are the ones that pay, right? But it's, you hear this phrase all the time, you're swimming upstream. If you buy calls in a high volatility environment and then the high volatility environment that's got everybody freaked out just kind of cools off and the market stops crashing or whatever that's causing the high volatility, yeah, you might have the direction right? Your stock might go higher, but the premium that was in those calls is going to rapidly evaporate. And so where you think let's say you paid $4 for the call and you think that call should be worth $8 now because the stock has moved, it might only be worth $6.50 or $7 because of that premium getting sucked out of those options. It doesn't mean you can't win. It just means you got to work harder. Yeah.
So I'm looking at this AMD trade. I'm saying, all right, got to pay $1 for, I think it was the monthly 110s, right? And I'm looking at the chart. I'm saying, if this thing goes here and really rocks, I'm looking at like 120 in a couple weeks, 20% move for a semiconductor stock in 3 weeks. Not crazy. Yep. Those options will go 10x. So yeah, you need a move. You need it to happen fast, but just the fact that there's elevated premium doesn't mean you can't hit a home run.
Right. And look, if you have an edge wherein you look at a chart like AMD and it's trading at 101.5 right now, if you're looking at that chart and you're of the mind that by the time these options get to expiration that you're buying, that stock's going to be at, let's say, $125, and you're buying the 110 calls for, I don't know what you paid, but let's say $5.
No, it's like $1.
Yeah. Okay, you paid $1 for them, right? If AMD goes to 125, who cares? Right. You just made 25 times your money, right? Or 15 times your money.
Yep.
Right.
Well, I was doing that math yesterday. I almost called you, but I knew the answer.
Yeah.
We'll see.
So in that case, if you have a price target, not everyone trades that way, right? But if you have a price target and you believe it's going to get to 125 or 120 or whatever it is, if that math checks out and you're planning on holding these options to expiration, fine. You know, as long as the math works, then do it.
And again, this would go back to our conversation from earlier this week. My stop would have to be 0 on this one, in all likelihood, because if this thing just rolls over hard, it's going to be trading at 25.
Which that's the one of the many advantages buying options gives you, right? Like you can define your risk that if I'm dead wrong, AMD could go to 0. I know what I'm going to lose in my options trade. That's a very powerful superpower that options buyers have that people underestimate how important that is. As long as you're sizing your position properly.
Let me add to that. You know, Sean, one thing that you've reiterated so much over the years is your ability to sleep at night.
Yeah.
Right. And it all comes back to that. If you're not sleeping at night, you're too big, everything like that. You also hear a lot that options are risky. Options are too risky, all those things. They can be, but if used properly, like exactly like you just said, you can go to sleep at night knowing no matter what country does whatever in the middle of the night, bank intervention, no matter what explodes in Syria, no matter what, you're a limited partner. You can only lose what you invested. You can't lose anything more. And I just want to take a nap just thinking about it, right? I makes me feel nice and cozy and warm, you know?
You know, Strazza, back when I was the only analyst at All Star Charts besides JC, before your time, and before JC was a daddy, we would joke about this sleep at night, and JC was like, who needs this sleep? You know, I get my best work done in the middle of the night. Well, now that he's a father of 3, he really loves this sleep at night thing.
Yeah, that's right. That's right.
He sells a lot more premium these days, right?
I'm selling a lot more premium these days. That is for damn sure. Yes.
Hey guys, listen, this was a great conversation, but are we just not going to do a chart report segment today? I've been very excited for a chart.
Go, hit it, go.
We're almost out of time. I don't know if we have time.
Do it.
I don't know if
do it, Spencer. Do it. Do it.
Well, we're almost out of time. I was gonna go straight to recess.
Inside job is this?
Yeah, come on.
I don't know if we have time today.
I think we do.
We could go overtime. We're like English soccer league. We just go into what do they call that? Bonus time? What's that called?
Give the man his flowers.
All right.
So stoppage time.
Steve Strazza is the chart of the day. At the chart report yesterday, big day for Steve Strazza. Chart of the day. Are you gonna like call your parents about it and tell them? Are you gonna frame it on the wall or something? What are you gonna do?
They already know. My parents are avid chart report readers.
Excuse me.
So I was drinking a Snapple yesterday. I took the cap off my Snapple. I looked under my Snapple cap and it said, when reversal patterns fail, they're actually continuation patterns. I said, wow, I don't think everybody knows this. So I shared it on the interweb. And basically what I'm trying to say is if these trades that I'm talking about, AMD selling puts and XLK, if they're going to work, this is the situation that we're looking at, right? These tops are failing. They're failing right now. We're getting follow through today and tomorrow, ideally, and we're off. If they keep lollygagging around here, the trade, the likelihood of these trades, these long ideas working really starts to fizzle out, right? Like this needs to go now. It needs to fail. Let's hook higher. Let's see it. But it's really set up for that. So I thought this was an important point to make.
Snapple's still a thing? Wow.
What?
Snapple still a thing?
Yeah, in college, we live next door to the Snapple lady. Like our beach house in Fairfield, it was next door to the Snapple lady. She used to love hanging out in her backyard when we were out there.
You guys might be too young to remember this, but I remember when Snapple first came out, and like the only sponsorship they had was Howard Stern's weird show that he did on public access TV back in the late 80s, early 90s.
Nice.
Yeah.
Nice.
Lime green tea is the best flavor.
Who drinks Snapple? Seriously. Does Perlman know about this?
10 years.
Does Perlman, is he proud of you for drinking all that sugar?
I really don't drink sugar. I don't drink sugar.
Can we get to Jason Goldfart's chart here? Scroll down to the bottom here. Sentiment trader. We've reached a relentless phase in the rise of yields.
Yes.
News articles mentioning that word. I guess yields. Oh no, relentless.
Let me guess. Let me guess. He's bearish.
News articles mentioning that the word and the bond market have spiked to the second highest in 8 years. It was only higher once, which was almost exactly 1 year ago. As you recall, 1 year ago is when yields peaked. So I suppose he is bearish yields. So he is bullish bonds, or at least this data is implying that last time these articles were written with mentioning this word this many times was a peak in yields and a ripper in bonds and stocks for that matter. So maybe he's bullish equities based on this data.
Yeah, that's how I interpreted it.
Yeah.
People generally use things like news mentions to indicate as an indicator of the trend is over. The current trend is about to end, right? So,
yeah. Imagine waking up every day and having to be a contrarian.
How about the chart? Naval Ravikant. A group of people who think differently is a market. A group of people who think alike is a mob.
I like that.
Oh,
Listen,
good.
He's got a bunch of good ones. That's all right.
Dude, the quote of the day in the chart report is definitely one of the best parts of the chart report. Underrated feature of the chart report.
Look, I might be preaching to the choir here, but the book that's out, it's not written by Naval, but it's about Naval. It's called like the what's the thing that Berkshire Hathaway guy writes all the time? The old,
you mean Warren Buffett? That version?
Not Warren Buffett. The other guy, Charlie Munger.
Old something almanac.
Almanac. Yes, there's an almanac. That's the word I was looking for. I'm getting old, guys. There's an almanac out there called, I think it's called the Ravikant Almanac.
Yeah.
It is a fantastic read. Fantastic read.
It is. Yeah, I got it. You can also just listen to like the whole thing on podcast. Now he's everywhere. Big thinker. Really good stuff.
Big thinker. He likes to think.
He is.
I think I met him once at in an early Stocktoberfest event. I think Howard had him as a speaker one year.
Really?
The very first Stocktoberfest. Yeah, back when nobody knew who Naval was.
Why don't we hit that bumper? We got a couple of minutes for a little recess.
Minutes, bro. You got 2 minutes.
Are we? Is the future proof the new Stocktoberfest? Not really, right? It's too big. Too big.
Too big. It's too. I mean, I don't want to use the word formal, but it's Stocktoberfest was kind of like shit show. It was a free for all, whereas Future Proof is very organized in all the great ways, right? Like Future Proof is by far the best conference I think we've all attended.
the speakers were very different, right? Stocktoberfest would bring new thinkers, creative thinkers, new products and ideas, and I think that was really exciting. At Future Proof, I'm looking through the list of things, and it's like how to save your wealth in a retirement account, how to save for college, and my family's growing, how to save for. It's kind of like
financial advisor stuff. It leans very financial advisor as opposed to leaning social, tech, VC, fintech, right? It's just a different vibe. It doesn't necessarily make one better than the other. They're just different. I did like the intimacy of the Stocktoberfest, though.
I don't think that's happening anymore. At least they're not doing that, right?
They haven't done a Stocktoberfest in a minute. So we should just do one, but we should do it in Napa instead of San Diego, right? Should we do it in Napa? Miami.
Hey,
anybody out there listening who thinks we should have an intimate gathering that we like to refer to as the Chart Summit in Napa Valley, California? Maybe drink a little wine. Anybody think? What do you think? What do you think?
The people did vote for Miami. I'll just throw that out there. The people have spoken, and they chose.
Yeah,
Miami.
but you don't want to be in Miami in May.
No, you don't.
Miami any day.
Yeah, Miami.
No, you don't want to be Miami.
Sounds lovely.
After St. Patrick's Day, you can't go to Miami.
What? I think we should do it in January, parlayed into the Bills-Dolphins weekend. I'm just saying.
Spencer, the Cubans, they call the Cubans the Irish of the Caribbean, you see.
That's not a compliment.
How is that not a compliment? Why are you hating on the Irish?
Hey, you got something to say? You got something to say,
Irish,
Israel?
the Irish get a lot of hate from all the other groups, don't they?
I love the Irish. First
Me
of all.
too. Me too.
Ireland is one of my favorite countries. I have a subscription to the Gaelic Athletic Association where I can watch my Irish hurling games. I mean,
what?
Don't ever insult the
All right.
Irish in my
All
presence.
my friends are Irish club members. I spend a lot of time at the Irish club in Fairfield, Connecticut.
Yeah,
JC tells me.
hating on
JC
the
tells
Irish.
me.
We're gonna get
JC tells me.
canceled.
I don't know. I've never experienced this myself, but JC tells me that I'm huge in Dublin.
Oh my God! So I'm in Dublin and we're at a bar. It's like in like the cellar, and I'm with a bunch of traders. And it's Sean McLaughlin. You know, they're like, he sounds like a great guy. They love you out there. They love you out there.
What are the odds that the Giants come out here and just throw a whooping down on the Dolphins this weekend?
Zero.
Oh my God.
0 odds.
What's the line?
Can you go negative? Yeah, the line's not big enough. Whatever it is.
The Giants don't score touchdowns. We don't score. So it should
Dude, it's 11.
Yeah.
11 for an NFL game is a lot, dude.
We don't score.
This isn't like Florida versus like Eastern Kentucky Tech, you know, like whatever teams are losing to these days. Like this is professionals, you know, this is the NFL. This is the National Football League, Sean, right? Tell them.
Did you figure out the television situation? Are we going to watch the Bills?
No, we need to figure it out. Look, Stock Market Mike is a member of the Gaelic Club of Fairfield. Who knew there was such a thing?
Yep.
Fairfield in the house.
We got to hang
summit in Dublin. That would be dope. I love Dublin.
You guys waking up at 9:30 Eastern on Sunday morning, watching the Bills play in London?
Yeah, we'll be tailgating.
Oh, that's right. You guys are at the Dolphins game.
Yeah, we'll be at the game. So our caterer gets there at 10. So, yeah.
Kegs and eggs.
It's actually a Cuban. It's a Cuban tailgate. We got like pan con lechon and pan con bistec and croquetas and yeah.
That sounds amazing. Nice.
We're gonna give these gringos a little flavor, you know?
All right.
All right. My recess real fast is saw John Mayer last night. Guy ages like a fine wine. Sounds amazing. And he's got his voice back. John Mayer.
Oh.
Yeah. Just tremendous. He's going on the only reason I went, it was a very last minute thing. He said it'll be his last tour for a while, whatever that means. So he's on tour now. If you get the chance, I recommend it. Tickets are not that expensive.
Spencer, just explain that. Was he not touring alone for a long time? Because he was doing this Grateful Dead thing, which I know was really big and probably took up.
Yeah, he didn't do his own tour for. This is his first tour in a while, 5 years, maybe more than that.
Beautiful music. How can you not love John Mayer?
I've got no insight on John Mayer, but I did see him with the Dead and Company this summer, and it was fantastic.
And I didn't know much about John Mayer either, and I went to a Stones concert like 10, 12 years ago, and John Mayer just came up and just started ripping it on the guitar, and I was like, oh,
nice.
Oh, wow.
Nice. Oh, man, that must have been
blown away. I didn't know.
Anyway.
I didn't know, but now I know.
Music people literally will tell you he's one of the greatest
guitar players.
I didn't know though.
Yeah,
I had no idea. I thought he was like a teeny bopper, one of these Taylor Swift people. You know,
no. He might have been at Fairfield around when you were there, JC. Probably a little older than you.
No.
He went to Fairfield.
Fairfield.
Stop it.
Oh, he's from there, but he that was he was gone by the time JC was there. Anyway, all right, that'll be a wrap for our show. What do we got today? We got Options Jam session with Sean at noon, Chart Request Live with Strazza and Pat at 1, and that will be a wrap on the day. That'll be a wrap on the show. Thanks to our guest, David Cox. Thanks to Sean. Thanks to Kimmy. Thanks to all of you. Hey, do us a quick favor. Hit that thumbs up. It helps us in the eyes of YouTube. Don't ask me why. It just does. I don't know why, but that's what they're telling me. So like us, we'd appreciate that. And go make some money. See you guys later.
Like Sean said, buy high and score low.
Go Bills.
Run it. I can't take no loss. I don't even know what it